We are back. Time to answer your questions now. Joe Terranova, I'm going to go to you first today from George in Canada. Joe, should I increase my position in Amazon during this dip?
Well, you missed the dip because the dip, I believe, occurred yesterday. We're pressing back towards the highs. I'm comfortable with taking a position here in Amazon at 24.25 because I think ultimately it gets above 2,500. It's like Rocky Balboa in those great movies. It just keeps taking the punches and moving forward.
Okay, so even though you say he missed the dip, but you're comfortable buying it at these levels. Just want to make sure we're cool.
Yeah,
on that.
I'm okay. I would buy it here. But if we're talking about a dip, I think the dip was yesterday.
Okay, yeah, and maybe the day before and the day before. Jimmy, to you, Paulito in Henderson, Nevada. Is Tractor Supply? Oh, funny how you got that one. It's up. Is it a buy? It's up 50%, 50% from the March low. Can you still buy it here, though?
Yeah, I think it's tricky to buy it here. I would not buy it on valuation. It's mid-20s multiple over a 2-time PEG ratio. The momentum is clearly behind it, so that could propel it up towards 130, but that's not a game I want to play. I think it's too expensive to buy right now.
Pete, to you from Jack in North Carolina. The casino stocks are far off from their highs, and I want to buy one for the long term. Any recommendations?
Yeah. You know what? My favorite gambling stock right now actually is DraftKings, but in terms of the casino stocks themselves, Las Vegas Sands. I own that stock right now. I actually own calls in there as well. Yesterday I bought some Wynn, but Vegas Sands would be my name.
Liz Young, to you, dividend versus price, okay? From Andrew in New York. When evaluating some of the value stocks that have been hit hard, how much weight should we be putting on dividend yields versus stock price growth potential?
Right now, I would be weighing stock price growth potential much more because a lot of the reason that you're seeing high dividend yields is because the price went down, not because the dividend went up. So you want dividends that are sustainable and durable. The dividend's probably under pressure in those names.
Joe, back to you, round two. Dave in Michigan, how many stocks should the average retail investor own? That's a good question. What do you think?
That's a great question. For me, I try not to go above 29, and I try never to go below 9. So somewhere in the range of 20 to 25, I think that gives you a nice concentration and the ability to focus on the companies, to look at conference calls and read the transcripts. I think that's important.
How'd you get to 29 and 9? I mean, why not 24 and 7?
About 30 years ago, we ran some statistical analysis, and that's what I've stuck with.
Okay. Whatever works for you, my man. Whatever works. Pete, back
I'm
to
still
you.
Here.
Yes.
Pete, from Green Ridge.
Yes.
From Green Ridge. I couldn't see that. From Green Ridge. What do you think about Altria Group? Is the current dividend sustainable?
That's a really tough one, Scott. I very rarely am in those kind of names. As a matter of fact, I'm probably more in the pot stock names than I have been in the cigarette names. So I don't pay as much attention to that, so I don't want to give an unfair answer. I steer clear usually of those names. I'll trade them once in a while, but most often I'm not in any of those names in that space.
All right, last one to you, Liz Young from Mike in Columbus, Ohio. I've been in some small cap value funds for several years, and they have not performed well. So should I get out, and where would you put those assets now?
Hi, Mike. I feel your pain. I wouldn't leave the market cap space. I still like small cap, but I think you could rotate into some of those growth names. The largest sector in small cap growth is healthcare. The largest sector in small cap value is financials. I'd be betting on healthcare over financials in the small space right now.